Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. It's great to be back, my favourite time of the week. Why? Because we're drinking beer. This week's episode brought to you by White Bay Brewery and also München Oktoberfest. Let's crack it. Let's see how they channel Germany. Come back to you with a few thoughts. Not bad. This week we're talking mining. That's right. Excavation. All things extractive. Big and small. Why? Because this week's issue focuses on 4 mining stocks to buy. That's why. But also because mining is where we've had some of our big successes. Whether it's the 1500%, you heard that right, we've made on Pilbara Minerals, or the 1000% we've made on Northern Star Resources with Evolution Mining not far behind. Yep, mining's delivered. Then there's the 32% we've made on BHP in the past 12 months. That translates to, we've been long-term holders, 20% a year. Rio Tinto not far behind, although this year's been a bit weaker than BHP, but still, 15+% a year. And then there's Fortescue, 40% in the past 12, 46% for the past 12, 46% a year for the past 5 years. Well, you can tell why the blue chips portfolio is doing well. Here's to you, big miners and small miners. Basically, these are returns you can't ignore. I mean, any of these fund managers say, we don't understand mining, so we don't invest in it. These are returns you cannot ignore. It's cyclical, sure, but you want to be there. You want to have exposure to that sector because basically we don't get them all right, but mining can create a great deal of wealth very quickly. I mean, that has been proven time and time again. And it can also create sustainable wealth when you look at the dividends the big guns are starting to deliver. They're in some of the blue chip dividend funds. I mean, that's one of the reasons we're overweight the sector. But the key is picking the right stocks. It's that simple. If only it was that simple to find them. That's where we come in. When I first got into the markets in the 90s, basically exploration was the way to go. But now it's these lithium companies and gold producers that excite the market. And part of the reason is that exploration success the success rate is so low. It's like 1%, on every $100 invested. It's very, very low. Another is that the market doesn't have patience for exploration. Companies like Rio Tinto just farm into projects. Basically, it's analogous to what Big Pharma do with biotechs. I mean, basically, they take a lot of the cream away from the minority investors or from the small companies. So, moving ahead, what do we look for? What do we look for in today's world? Essentially, projects that can monetize quickly. I mean, that's the key. And gold's a good one still because the technical risk is pretty low in terms of development. Like, gold's also easy to sell. It's what they call fungible. So there's no quality issues. You want an asset where they've found a resource at the very minimum. And it might be in a district where they've got a processing plant. But I'll go through that a bit more. But I want to get on to lithium, where basically there seems an ability to find large deposits. And that's what we're interested in. Some of the large hard rock projects are attractive. That's certainly what attracted us to Pilbara Minerals. They have a resource of over 100 million tons, so that's nothing to sneeze at. Like, to give you an idea, we looked at another company recently that has a resource of 12 million tons, and they're actually going ahead. The economics are not going to be as good for obvious reasons. Like, mining's a scale business. The more you produce, the lower your costs are. And at the moment, you've got, like, lithium trading at relatively high prices, certainly historically very high. So some of these smaller projects get through, and that doesn't mean you invest in them. So that's why you need to be very careful. You need experts on the ground. And that's why this week we covered a lithium developer, and they're in production in 18 months. One of the things we liked about this developer is their ability to move downstream. And I think that's going to be a trend in mining. And it's a logical trend. Like Pilbara Minerals, they produce spodumene, which is this complex mineral, but it's only got like 6% of that is lithium. So what they then do is process it into carbonate or lithium hydroxide. I mean, look at the shipping costs. Look at just a trend for domestic processing, and you can see why Pilbara Minerals is increasingly looking to move downstream. But the biggest reason is that manufacturers want the minimum possible carbon footprint in order to sell their product to big markets like Europe. So that's the key. That's where the demand's coming from. So then, looking back at gold producers, like Evolution Mining got sold off last week. I think it was about 10% from $2 to $1.80. Why? Because their quarterly update didn't hit exactly the production, numbers that the market thought they needed to meet, for 12-month, for their 12-month numbers to get done. But I mean, and we looked at the broker commentary, and it was just unrelentingly negative. Now the stock has bounced back. I mean, a big part of making money is, of course, intuition, your gut instinct, but it's also experience. Like our mining analyst, Peter Tilton, he was a mining engineer before getting into the markets. He was a mining engineer for a long time for big projects. So he's more realistic about these things. He's not just plugging numbers into a spreadsheet that invariably comes straight from the company. You make money when you have a grasp of these operational factors enabling you to look through these short-term hiccups. So the last point to make in relation to mining, I think, is that I would encourage investors newer investors to stick to bigger miners. I mean, one stock we cover got whacked because of a forced capital raising. And that wouldn't have been the case with the bigger miner. They have more fat. Like, typically, they underplay how much capital they need. And mining's a very capital-intensive business. I mean, they're always looking to grow their production. I mean, that is relentless. So, and it also gets back to the lack of patience. So the key is, if you're going to play in the smaller miners, you understand them very well, and you've got pockets that are bigger that can enable you to possibly put more money in. Because we do see a big opportunity in this smaller producer. So what's next? Well, we've got the technology stocks coming your way. We've also got reviews of our big and small cap portfolios in blue chip and in our small caps under the radar report. So you know how I like to talk the talk. Well, we show you how we walk the walk. A beer. Well, it looks pretty fancy, doesn't it? Roselle's Finest Brewery, White Bay. Their only brewery. So they've gone for the München Oktoberfest look. Well, I mean, to me, it doesn't really taste like a Weiss. It's not a Weiss beer or anything. I mean, it's pretty innocuous. It's nice though. It's a nice beer. Like, they've got the marketing right, and I think the taste, well, it's good enough, and that's what counts. Here's to Beers with Rich. Great to see you again. See you next week.